Welcome back, everyone. If you have followed us from budgeting to investing, you are ready for the next big step, building wealth through real estate. Today, I'm flipping the microphone to Kevin, who is not only a licensed realtor, but also a seasoned investor. Hey, Kevin, let's help our audience to understand the real power of owning a property. Hey, Kevin, before we get into the details, why should someone consider investing in real estate in the first place?
Jerry, that's a great question. Owning a property has long been considered providing stability, personal freedom, and pathway to long-term wealth. Whether it's for personal use or investment, real estate plays a critical role in many Americans' vision of financial success. Generally speaking, real estate offers three major wealth-building benefits. The first one is passive income. Rental income provides monthly cash flow. For instance, Maria's two-bedroom rental property generate about $1,250 per month. That's $2,500 in income on a monthly basis. After covering typical expenses like taxes, insurance, maintenance, and management fee, her net cash flow is approximately $1,000 per month. The second benefit is tax benefits. Owner can deduct mortgage interest, property taxes, insurance, maintenance costs, and depreciations. These write-offs lower your taxable incomes. Finally, appreciations. Real estate value needing to raise over time. Nationally, real estate has appreciated around 3 to 5% annually. Over 10 to 15 years, that can significantly increase your net worth.
Thank you, Kevin. We have talked about the benefits, but Kevin, let's be real. What are some of the downsides or challenges people should be prepared for when investing in real estate?
That's a great and important question, Jerry. While real estate offers a powerful advantage, it also comes with a share of risk and responsibilities. First, high upfront costs, down payment, closing costs, inspection, and initial repair can require significant capital for everyone. The second one is ongoing maintenance. Property needs regular upkeep. Plumbing, electrical, roof repairs is your responsibility as the owners. The third one is the vacancy rates. Rental property won't always be occupied. Vacancy means lost incomes. The next one is market fluctuations. Property value can decline, especially in volatile or oversaturated markets. Finally, commitments. Managing tenants, handling repairs, and stay compliant with landlord-tenant law takes time or money if you hire a property manager and connect you with the right expert to protect your investments.
Fortunately, many of these risks can be mitigated by partnering with a professional realtors during your property acquisitions. A knowledgeable realtor helps anticipate challenges, guides you through informed decisions, and connects you with the right expert to protect your investment.
Got it. Let's start with the basics. What types of real estate investments are we talking about here?
Let it break down to two categories: residential real estate and commercial real estate. Residential real estate includes single-family homes, townhouse, condo, and multi-family units up to 4 units. This sector make up a majority of U.S. real estate transactions, contributing over $2.5 trillion annually, according to the data from the U.S. Census Bureau and the Internal Revenue Service. As 2023, about 65% of Americans own the home they live in, while approximately 14% own some form of investment properties, making residential ownership a widely understood and accessible entry point into real estate investing. The second category is called commercial real estate, including large apartment buildings, office space, rental center, and industrial properties. Though fewer in number, commercial property account for over $1.2 trillion in transaction volumes annually and represent a significant portion of long-term investment portfolio in the U.S. economy. Together, real estate accounts for roughly 13% of the U.S. GDP when factoring in related industries like constructions, financing, insurance, and leasing. Understood, both sectors help investors identify the right opportunity based on their goal and risk tolerance.
What should someone keep in mind when it comes to the mindset behind residential versus commercial real estate investing? What's the difference from an investment perspective?
Both are great questions, Jerry. First, residential investment generally less complicated for first-time investors. It's more affordable, less complex to finance, and familiar with most of people. A residential property can serve dual purpose, either as a primary residency or as a rental investment. The mindset here is often centered around personal utility or supplemental income through rental cash flow. Commercial real estate, on the other hand, is approached with a business mindset. It's not just about owning a building, it's about acquiring a cash flow business assets. This investment typically generates income through lease from multiple tenants or corporation clients, and they often require more structural finance operational approach. In short, commercial real estate offers bigger return and income potential, but also comes with a high costs, more complex financing and property management demands. Investing in real estate, whether it is a home or a commercial property, isn't as simple as making a retail purchase like buying an iPhone. It's a major financial decision that involves legal contracts, negotiations, and market dynamics. Without a professional realtor guiding you strategy, helping you manage the risks, and coordinating the moving parts, you will face delay, overpay, or miss critical opportunity. A trusted realtor ensures that every decision aligns with your financial goal and increases your odds of success.
Kevin, real estate markets are highly localized. Can you give our audience a snapshot of what's happening right now in the North Virginia residential market? You are licensed there. And what are you seeing in terms of pricing, vacancies, or trends compared with last year?
Absolutely, Jerry. Real estate is very local, and Northern Virginia is a great example of that. In 2024, the median home price in our area hovered around $610,000. But as of second quarter 2025, we are seeing that number rise close to $640,000 due to inventory shortage and continued demand. For residential rental, remain low, hovering around 4%, which means rental property are still in strong demand. Days on market have also shortened slightly compared to last year, dropping from an average of 27 days in 2024 in around 21 days in second quarter 2025, signaling a competitive environment. Northern Virginia is especially attractive due to its proximity to the Washington, D.C., strong job market, and top-rate schools. That combination continues to draw both family and investor. It's why understanding localized data is so crucial. National trends are helpful, but they don't always reflect what's happening on the ground in your specific zip codes.
Hey, Kevin, what are the values a realtor brings to their clients when they purchasing a property investment?
Thanks, Jerry. Realtor value spans the entire real estate transaction lifecycle, from defining your goal and identifying the right property to closing the deal and ensuring the long-term success of the investment. Think of this way. If you are the project manager of your wealth journey, your realtor is your key strategic partner. Just like in any major projects, we manage 4 essential components. The first one is called the cost. We help clients make some financial decisions by evaluating market comps, recommending offers that align with the long-term goals, negotiating pricing, and preparing contracts that protect their interests. The second is the schedules. We keep the process on track, coordinating inspection, title works, and lender timelines to avoid delay and missed opportunity. The next one is called performance. We evaluate properties based on locations, conditions, communities, factors like school and long-term potentials, ensuring the property aligns with your investment goals. Finally is the risk. We identify red flags in properties, connect you with trusted vendors, and help you navigate complex disclosure and legal obligation to avoid costly surprise. From day one, we conduct research, provide strategy, and manage stakeholder relationship with lenders, inspectors, attorneys, and title companies. It's a team effort, but without a realtor leading that team, that odds of making a costly mistake skyrocket. Having a professional realtor by your side isn't just a convenience. It's essential to turn your investment into a successful wealth building outcome.
Hi, Kevin. Now that we have covered the basics, Let's dive deeper. How do different real estate strategies align with different financial goals?
That's a great question, Jerry. For example, if your goal is cash flow, a single family rental in a strong school district may be the right entry point for you. If you are looking for appreciations, you may look at emerging neighborhood or planned developments. Short-term rental like Airbnb can produce strong rent returns, but require more active management and compliance. We also see some investors use BRRRR strategies, which is buy, rehab, rent, refinance, and repeat to scale faster, comes with higher risk and effort. This ties directly into Maria's strategy. Her real estate investment was structured to generate consistent monthly cash flow while also appreciating in value over time, aligning perfectly with the goal we just discussed.
What about long-term strategy? How should our viewers be planning their portfolio?
Every good real estate plan should include a clear asset strategy. Will you sell your property in 10 years? Diversification, maybe start with residential and then add commercial. The third one is called leverage planning. Understand how to use equity from one property to fund the next. And most importantly, adjust based on life stage and income goal. What works for you in your 30s may not work for you when you're in your 50s.
Sounds like planning and flexibility are the key.
Exactly. And that's where professional financial advisors and CPA comes in, helping tailor your strategy and timelines to your lifestyle.
There are strategic differences in growing a portfolio with residential versus commercial.
Residential is great for steady, predictable income. Once you build equity and gain experience, many investors scale up to commercial, where return can be larger, but risk and responsibility also grow.
How about the financing?
Residential loans are easier to obtain, especially you are living in the property first. Commercial loans are based on more on property incomes and may require larger down payments. Let's tie everything together. Now that we have covered strategy, planning, and growth, it's time to summarize what all of this means for your real estate journey.
This has been a power-packed episode. Real estate isn't just about owning property, it's about building long-term financial freedom.
Whether it's your first home or a 10-unit building, real estate should be part of your wealth building toolkits. Your realtors, they should serve as your strategy partners, guiding you through each phase, managing the process, schedules, performance, and risk to help you achieve a successful investment outcome.
Next time, we'll talk about life insurance, not just for protection, but as a strategic financial asset.
If you enjoyed this episode, be sure to subscribe, give us a like, and leave your question or comment below. We are here to help you navigate your real estate journey. We would love to help guide you next step into real estate.
Let's build wealth one decision at a time. Thanks for watching this episode. See you next time.